Good afternoon. My name is Kim Broughton. I am a business relationship manager or business banker for PNC Bank, covering the Baltimore City and Baltimore County areas. I collaborate with small business owners to analyze their current state of business, implement strategies to achieve short-term and long-term goals, as well as implement solutions to increase cash flow, expedite account payables and accounts receivables, mitigate fraud, and provide access to capital. I would like to first thank Coppin State University for the opportunity to execute this presentation for EI-CAC seminar. So let's get started. There are different areas to gain access to business capital. Business capital essentially is the liquid funds the business has to pay for day-to-day operations and to fund future growth. The four major types of business are debt, working, equity, and trading capital. The business capital that can assist small business owners with obtaining loans and financing from a bank is working capital. On the other hand, the financing and loans a business obtains from a bank is referred to as debt capital. Working capital refers to all assets that a business owns, such as account receivables, cash equivalents, cash, and the funds that the small business has within the bank. Small businesses must ensure they have sufficient working capital to purchase goods, materials, equipment, inventory, execute business services, and maintain a healthy payroll. Working capital, it will definitely be a key area that any small business owner should focus on. And we can focus on that by diversifying our clientele, having a strong product within the market that will assist in developing market share, as well as ensuring that we have a strong leadership team that can give additional advice around the business portfolio, the business strategies, and the business objectives. Let's discuss debt capital a little bit further. Debt capital, even though it's considered a business liability, is typically the first option for the small business to increase cash flow, business assets, expand, and generate new growth. By obtaining different forms of credit items, such as small business term loans, small business lines of credits, as well as for newer businesses, they can have access to the SBA term loans, SBA lines of credits. And whether you're new or existing, you should definitely take advantage of the small business credit card, which is considered revolving line of credit. Small businesses, especially who have short collateral falls and have difficulties with cash flow, should definitely seek out the SBA for their term loans and lines of credit. The SBA can provide mitigations for these challenges and provide financing quickly. Now, there are several areas that small business owners should definitely focus on, being the business cycle and the business operating cycle. There are four areas of business cycle: expansion, peak, contraction, and trough. In regards to the operating cycle, it focuses more on accounts payables, accounts receivables, producing of the goods, selling of the goods, and just that cycle of how funds come in and funds are generated and how funds are leaving essentially your bank account and paying for liabilities and debt. Generally, small businesses should seek out capital for expansion when they're increasing staff or growing, their employment size. Seasonal businesses who, whether it's spring or winter, have difficulties in between, or they shut down for a different season at a time. Developing a new product or product line, taking on new business ventures, and purchasing commercial property, or for additional added security. Small business owners should definitely seek to also reduce their debt by substituting rent for purchase. Oftentimes, monthly commercial rent can be a lot more than actually purchasing the building. So definitely keep that in mind. We have a saying in the financial industry: borrow funds when you don't need it, because generally when you do need it, you might have issues with cash flow and credit challenges that might stop those plans and actions. So to stay on top of that, you want to definitely coordinate with your business banker, CPA, and financial advisor, and have that strong financial team behind you to make sure we're putting the best plan, business plan, and financial model in place to ensure you are successful along with your business. Now, another critical area of debt capital, clearly, how to apply for the credit, how to receive the credit, and how to utilize the credit. Banks utilize the 5 C's of lending: character, capacity, capital, collateral, and conditions. Now, depending on the loan size, generally speaking, under 100,000, no personal guarantor is needed, and we call that unsecured lending. However, above 100,000, we call it secured lending. And different type of banks, you can utilize different type of collaterals to secure that loan. The different type of collaterals can be accounts receivables, business inventory, business equipment, and commercial properties. In regards to commercial properties, generally, you're looking at what we call an 80 to 20 lending guideline, meaning for conventional lending, a small business owner or entrepreneur would have to come up with the 20% of the total loan size, whereas the bank will finance the other 80% of it. Again, different type of capitals, different types of collateral, accounts receivables, business inventory, business equipment, and commercial properties. In addition, small business owners want to ensure they are generating additional income and revenue to support the capacity of the new loan and not be confined to an issue when it comes to debt to income ratios. It's a critical ratio that banks utilize to ensure, again, the small business owners have the ability to repay that debt that they're seeking. Another critical aspect is credit score. You want to ensure that you're maintaining a 680 score and higher. If you have any derogatory information, as we all do, it is common in the world. You want to discuss that with your banker prior to submitting any application. I'm a firm believer in giving your business banker all the information up front so that we can do the best for you and your business. And as I was just mentioning, your business banker will play a critical role in your success of the business, small or large. We are the advisors, we are the experts, and we are the knowledge experts as far as how to provide success and different solutions so that your business will stay afloat, it'll be profitable, and generate revenue. An area that business bankers should review with you probably every 90 days or every 6 months is to understand the business current objectives, business short-term and long-term goals, in addition to the vision for the business. Most small business owners think just because they're starting up, they don't have anything significant to review or things that they should outline. Every business, whether small, new, existing, or brand new, should have a business plan, a business proposal, and a business model. Another critical area that your business banker should always have access to is the business financials, whether it's your P&L, balance sheet, tax returns, a personal financial statement. These are documents that a business banker can review on your behalf at no charge, especially no charge, and they can honestly tell you how much your business can qualify for from a lending aspect. More importantly, business bankers should collaborate with small business owners consistently. If you're with an institution where you're not hearing from your business banker 6 months, 1 year, you may want to consider changing banks or finding a business banker that can meet your needs as well as the business. Now, going back to that full disclosure, again, all details you definitely want to share with your banker. The banker that you work with is only as strong as yourself, and with more information, we can best determine the plan for you of succession and to ensure your business will be profitable. Now, another key area that small business should focus on is record keeping and documentation. Most often, small business owners will have one business checking account, and they'll do all their transactions through that one account, which can make things confusing, which can make things hard to track down, and also it can be a nightmare for your CPA or accountant. As a best practice, all business owners should have 3 types of accounts: your operating account, your payroll, excess funds, and capital account. By diversifying with these 3 accounts, all the funds coming in will have proper record keeping as to what they're for and how to be utilized. And then around tax time, your CPA will love you because he'll know which account to utilize for any type of write-offs, depreciation of equipment, and it'll be in one source, one location, versus looking at one account and trying to go through 1 million transactions at one time. Again, having these 3 accounts will make your accountant CPA life much easier, especially during that tax time. And most often, not having the 3 accounts, and if you have the 1 account, that's most often the reason why accountants and CPAs have to file an extension, because they're taking longer to review your account history via your statements. A further step would also be separating your expenses and utilizing a business credit card for those expenses. Again, one central location for the expenses. He or she can quickly analyze the expenses and know how to utilize the information to place on your taxes. Again, it simply enhances business record keeping and documentation, which is critical. Risk and opportunities for solopreneurs. The biggest area of concern and worry if a new solopreneur is making enough income to pay the bills. And honestly, that's a constant issue and stress for most of us, whether you're a solopreneur or not. But specifically for solopreneurs, they'll face the challenges of having to generate their own clients, integrating into new markets, and inconsistency of payments and accounts receivables, and obviously market competition. You definitely want to ensure you've done your market research, you've done your product research, and you've done your client demographic research before venturing on to becoming a solopreneur. However, there are many benefits to being a solopreneur. Rewards such as work-life balance, which is critical for us as husbands, wives, children, family members. Second, generate income while you're asleep. There's no other feeling knowing that while you're asleep or not even having to go to a 9 to 5, you are still generating income and funds to support your business and your family. In addition, it eliminates that 9 to 5 schedule, freedom to travel, go to Florida, especially during the winter times, and just have a good time. And lastly, being your own boss. There's no other better feeling than being your own boss. I can definitely attest to that. Now, to mitigate these risks for solopreneurs, I recommend, again, having a diversified client base, doing market research. But another key is participating in local and online communities such as business chambers and BNI networking groups. Those local chambers and BNI groups can take your marketing to a whole nother level. It also gives you a chance to discuss your business and services and products with a group of individuals. Normally, those groups are anywhere from 20 to 25 people, if not more. Another thing you can definitely do is take advantage of different debt capital. Again, even though it's a liability, it will help you in those cash flow shortages in the coming months if you're not generating any consistent revenue. Lastly, surround yourself with mentors, financial advisors, CPAs, and your business banker. You want to ensure you have a team behind you of experts who know the market, know the industry, and know the banking rules and guidelines. Having all of us together, I can definitely reassure you, you will have success and less stress. Another key area is to ensure you have a mentor. Work with someone who's already been in the industry and has a proven track record. See how they're doing their business model, their business objectives, see how they're utilizing the different accounts, and seeing how they're utilizing the tactics to integrate into the market and how they're analyzing their customer base. Again, diversify the customer base. The mentor is critical, as most often solopreneurs generally fail within the 2 years simply by having not all the information, not having all the business knowledge or the intricate details of the business segment. Lastly, resources. You want to make sure you have an open communication with your business banker, your CPA, and your accountant. The three of us will definitely give you the tools, tips, and the secrets to be for you and your business to be successful. We all know, especially being a solopreneur or a brand new business, you're definitely going to have some stress. You're going to have some worries. You might even have some hesitation. But if you do the right steps, implement the right strategies, and implement the right solutions, you definitely should see success within your first 2 years, if not before. Again, leverage the debt capital, build the business credit and personal credit early on, and again, full disclosure with your business bankers. Prior to jumping into being a solopreneur, you want to make sure you have enough cash on hand or savings to ensure it can carry you at least 3 to 6 months. If you're able to even achieve longer, great. Again, if not, you want to bridge that shortfall of the cash and savings you have on hand by utilizing debt capital, being the bank's small business line of credits or loans. And again, for a new startup, definitely want to leverage the SBA. Definitely thank you for your time. I am open to answer any questions or concerns. I can definitely be available to even assist and provide guidance to new solopreneurs and small business owners. My email is kimloy.broughton@pncbank.com. And my best contact phone number is my work cell phone, which is on me all day and all night. And my number is 410-960-3663. I look forward to working with you, and thank you for your time.